Hello investors, welcome back to your number one place for all your investing needs. So we're almost at the end of the month, so let's finish it off with top 6 dividend stocks right now for the month of May 2020. So these are going to be dividend stocks that have a good buying opportunity right now and something to keep an eye out on. Obviously, do your own research on. Now before we get into the video, guys, can we lightly tap that like button for me? Can we get over 250 likes? I challenge you guys to get over 250. Let's see if you guys can do it. Leave a comment below. What stocks are you going to be buying right now in the month of May? And also, don't forget to subscribe to the channel for more content like this. And if you guys want to sign up for Webull or Robinhood, you can get 2 free stocks when you sign up for Webull worth between $12 and $1,400 when you deposit your first $100. And also, you can get a free stock worth up to $300 when you sign up for Robinhood. Links in the description. Okay guys, so the number 6 stock on our list is going to be Merck Co, which is ticker symbol MRK. So this is an American multinational pharmaceutical company and one of the largest pharmaceutical companies in the world. And actually they just had FDA approval combined with another company. The approval was for a prostate cancer drug, and that happened actually on Wednesday, May 20th, 2020. Currently, the stock is trading at $76.89. It's down about 66 cents today. This stock is down about 15% from the high up here in a January-February period. The stock has a PE of 14.64. We have a dividend rate of $2.44 yearly, so the yield is 3.15%. So 3% yield, not bad at all. The market cap for this company is $195.74 billion. If we look at their dividend right here, we can see that it's 61 cents per quarter. Obviously, if we click on their dividend yield, the 4-year average yield is just about 3%. So, it stays, it goes up a little bit, goes down a little bit, but it stays around that average of about 3%, which is not bad at all. We like a 3% dividend. The years of growth, they have 9 years of growth, so they're growing, slowly, but surely they're getting up there, and they're paying out about $2.26 right now per share. And that's just going to keep on growing, I believe. It's going to get higher and higher and hopefully continue this years of growth. If we look at their dividend history, obviously right here, they pay quarterly. It was around 48 cents. Then it was increased to about 55, and currently it's at around 61 cents per quarter. If we take a look at their dividend safety, their payout ratio is 46%. That's not bad at all. It was around 54%, and it's been going down, and it's around 46 currently. But this stock, I see, having a bright future and a nice recovery in the long term, obviously long-term hold. So this is a good buying opportunity in my opinion, and that's a stock that I'm going to be looking at to add to my portfolio in the month of May. So this is the number 6 pick for me. Number 5 on our list is going to be Texas Instruments Incorporated, ticker symbol TXN. This is an American technology company that designs and manufactures semiconductors and various integrated circuits, which it sells to electronic designers and manufacturers globally. The stock is currently down about 10% from its highs up here in February. It was trading at around $131, currently trading at $117.48, up about $4.80, so about 4.26%. That's a nice jump on this stock, actually. It has a PE of 27.89, dividend rate yearly of $3.60, with a yield of about 3.19%. So very close to Merck Co, the previous stock that we talked about 3%, which is nice, a nice little juicy yield to look at. Market cap of $103.41 billion. If we take a look at their dividend score, obviously it's 90 cents per quarter. If we look at their dividend yield right here, we can see the 4-year average yield is about 2.5%. So it's been slowly increasing. It was about 2%, 2.5%, and now we've reached a high of about 3%, which is not bad at all. If we take a look at their dividend growth, this company has had 14 years of growth. That's a serious amount of years to have growth, 14 years. So up here, it's been increasing and increasing down here from the low 49 cents area, $1, and now it's about $3.21 per share yearly. So this is a nice increase to see. If we look at their dividend history, obviously they're paying quarterly. They were paying about 50 cents down here, 62 cents, increased it to 77, and currently it's about 90 cents per share. And then their dividend safety, their payout ratio is 89%. So this has been increasing a lot. It was down here at about 50%, and it's been increasing this year, throughout the time, and now it's about 89%. But I'm not too worried about the payout ratio. Obviously, this company, I see a lot of potential in as well, and a very nice recovery as well in the long term. It was doing very, very well. As you can see, in the last 5 years, it was trading down here at about $52, raised all the way about $131. So that was a very, very nice gain. And I definitely see this one coming back, in the near future again. Number 4 on our list is going to be Medtronic PLC, ticker symbol MDT. So this is a medical device company that generates the majority of its sales and profits from the U.S. healthcare system. The stock is down about 18% from the high up here in February. So it's trading at around $121. Currently it's trading at $98.08. It's up about $1.05 or about 1.08%. If we look at their PE ratio, it's about 20.23 with a dividend rate yearly of about $2.16 and a dividend yield of about 2.23%. So this one is a little bit lower than the previous two, but it's still a nice dividend of about 2%. Market cap of 130.04 billion. If we take a look at their dividend, it's about 54 cents per quarter. If we look at their dividend yield right here, the 4-year average yield is just about 2%, like we said. So it stayed consistent at about 2%, or a little bit lower, a little bit higher, which is not bad. If we look at their dividend growth, years of growth, 19 years, this is definitely something you want to look for. I mean, these companies that have these long-term years of growth, I mean, it's not like Aristocrat where it's like 30, 40, 50, 60 years in a row or whatever, but 19 years is still a lot, and it's getting up pretty high, and that's a very successful thing in my opinion. I mean, if a company has over 10 years, that's definitely a great company in my opinion. Even a little bit lower than that, but I look for anything that's about 10 years or higher. It could be a little bit lower depending on what type of company it is, obviously. If we look at their dividend history, they're paying about 43 cents quarterly, and it's been increasing slowly, and currently it's at about 54 cents quarterly. Their dividend safety, obviously right here, payout ratio is about 45%. It was down here in the low 30s, and it's been increasing to about 45 currently. But this, obviously, like we said, this is a medical device company that generates, most of its sales and profits in the U.S. healthcare system. Healthcare is definitely something that we're looking at right now, and it's going to be, booming pretty much. So this company is definitely going to keep on rising up. Definitely going to be recovering back, to these highs up here, about $120 per share. I see this one going up, and that's why I am keeping a very, very close eye on it and might even add it to the portfolio. The number 3 stock on our list, a lot of you guys might be familiar with this company. It's going to be IBM, which is International Business Machines Corporation. Ticker symbol IBM, obviously. This is an American multinational technology company, and it's currently down about 25% from its high up here, about $155, $156 per share. It was down here at about $94 during the crash, and currently it's trading at $121.38. It's up about $1.09 or about 0.91%. PE ratio of 10.85, very low PE. Dividend rate is about $6.52 yearly, which comes out to be a yield of about 5.42%. Very nice yield, very high yield actually, especially in a company like this in a technology sector. 5.5% almost, with a market cap of 106.8 billion. I like this one a lot. If we look at their 5-year of here, the company has been staying around this range between 160, 120, 130. So this is a good price for it. I feel like this is a nice area to get in. It has a lot of potential to go, in an upward direction. Now, if we look at their dividend, the amount is $1.63 per quarter. If we look obviously here on their dividend yield, the 4-year average yield is about 4.37%. So it's been increasing, very nicely since 2015. It's just been getting higher and higher. Their yield is getting higher and better, which is a good thing for the investors, obviously. And then years of growth, 21 years. Once again, beautiful, beautiful, beautiful. Over 20 years. So 21 years of growth right here. It's been increasing, slowly up here, just getting better and better and better. Now it's giving out about $6.43 per share, which is amazing. If we look at their dividend history right here, obviously, it's a quarterly paying company. It was giving about $1.50 down here. Currently, it's at around $1.63 per quarter. And then if we look at their dividend safety, it's about a payout ratio about 58.8%. So it's been increasing. It was in the low 20s down here in 2015, and it's been increasing up here to about 58% right now. But IBM, definitely another one to look at, especially since it's a technology company. It has a lot of, potential. Technology is key for the future, and everybody's going to be, looking into technology stocks. Now, I definitely know you guys all know this company. So the number 2 stock on our list is going to be PepsiCo, ticker symbol PEP. So obviously this is an American multinational food, snack, and beverage corporation. PepsiCo has interests in the manufacturing, marketing, and distribution of grain-based snacks, foods, beverages, and other products. So this one is down about 10.5% from its high up here, about $146. And during February, it went down to a low about $103, a little bit lower than that, and currently trading at $131.26. It's down about 47 cents or about 0.36%. The PE ratio on this one is about 24.69. Dividend rate $4.09 yearly with a yield of 3.1%. 3.1%, not bad, especially for Pepsi. Market cap 182.78 billion. Obviously, you guys know my views on Coca-Cola, and I really, really like Coca-Cola, but Pepsi is very, very nice as well. I mean, they're competitors, but they have very, very nice, competition going on with each other, and Pepsi has a lot of upside as well. So if we look at their dividend score, it's about $1 per share. If we take a quick look here at their dividend yield, 4-year average yield is about 3% almost. So it's been steady around that 3% area, increasing a little bit or decreasing a little bit, but it stays, consistent. If we look at their dividend growth, wow. Guys, take a break right here. Smash that like button for this. Smash that like button for Pepsi, guys. 47 years of growth. 47 years of growth for Pepsi. They have been increasing their dividend for 47 years. That is amazing. That is something that you do not see every day. So this is amazing. Wow. So they're paying about $3.79 per share right now. Amazing, guys. Just smash that like button for Pepsi right there. They're doing an amazing job with their company. They pay out a quarterly dividend, obviously, about $1 per share. If we take a look at their dividend safety real quick, the payout ratio is 76%. In 2015, it was around 60%, and it's been increasing slowly. But Pepsi, definitely another one to keep an eye out on right here. That was a very nice buying opportunity, obviously, at about $100 per share. Same as Coca-Cola, good buying opportunity. Look at that V recovery. The stock just boomed back up. Now it's consolidating, and we're hoping for another push back up. All right, and last but not least, the number 1 pick is going to be ticker symbol VZ, which is Verizon Communication. This is an American multinational telecommunication conglomerate and a corporate component of the Dow Jones. So obviously this is down about 8% from its all-time, not all-time high, but the high in February. So it's trading around $54.26. It's down about 12 cents today, or about 2.22%. It was down at about $50 per share down here, and it's been recovering. If we look at their PE ratio, it's about 11.45, which is super low. Dividend rate $2.46 per share. Their dividend yield 4.5%. 4.5% on Verizon with very good potential. Obviously, you guys know Verizon is in the competition of obviously to be one of the best in the 5G race with all the other companies like Comcast and AT&T. So 5G is going to be a huge thing, and that's already beginning to happen all around the world. And Verizon is one of the biggest competitors, obviously, in that field, and a 4.5% yield with a company that's going to continue to grow, that is really good. And then streaming services and all these other things that are going to be adding up in the future. Verizon has a very bright future, in my opinion. They have a market cap of $225 billion. If we take a look right here at their dividend score, obviously it's about 61 cents per share. And then if we take a look at their dividend yield, 4-year average yield is about 4.7%. So it's been consistently staying up a little bit or down a little bit, not too much change. If we look at their dividend growth right here, we've had 13 years of growth, which is good. Remember I said I like to see 10 years or higher in the companies that I'm looking at, which is good right here. They pay out about $2.42 per share. And then if we take a look at their dividend history real quick right here, they pay a quarterly dividend, obviously, has been increasing very, lightly at around 61 cents. And then obviously their dividend score right here is going to be a payout ratio of 51.78. It's been staying around this range of 60% to 50%, so 50 to 60% range. But yeah, like I said, Verizon definitely one that I'm keeping an eye out on because they have a lot of potential for growth, especially with the 5G and all these streaming services that are going on in the world and all these other competitors. you know, they have a very, very high chance of, you know, more growth. So I'm very, very invested into Verizon. I have, you know, already money invested into it, and I might even add more shares to my portfolio of Verizon just because of this and the 4.5% dividend rate. That is very juicy. So now that we went over the top 6 stocks that I'm going to be taking a look at right now for the dividend stocks, let's take a look at the Dow Jones right here real quick. So in the past 5 days, the Dow Jones has, you know, went up from about 23,500 points to about 24,500 points. So about 1,000 point increase. But obviously, if we look at the monthly chart, you know, it's been pretty choppy. It's went up to this high, went down, went back to that high, and then went down a lot, and then increased back on the Moderna, you know, vaccine news that came out a couple days ago. So that really helped the stock market go up. I think the market was up about almost 1,000 points on Monday. Tuesday we had a little bit of a pullback, obviously, but then we recovered back on Wednesday with about 369 points back up. But in the past 6 months, obviously, you know, the market was down, and it's been staying around this area at about 24,000 points now for, you know, a month, a little bit over a month. So it's been staying there. Hopefully we can see a trajectory and going back up to hit all these, you know, the highs and get back to about 30,000 points. That would be amazing. But yeah, guys, anyways, if you guys enjoyed the videos, don't forget to smash that like button for me. Leave a comment below what stocks you're going to be buying in the market now. And also subscribe to the channel for more content like this. Like I said, links in the description if you want to sign up for Webull, M1 Finance, or Robinhood. And I hope I see you guys in the next video. Until then, goodbye.